Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And today I want to share with you the stock market update that I sent out to people just a few hours ago. It's my weekly update. If you've been following my updates or my YouTube videos, and by the way, you can get the updates for free. Just go into the description. There's a link to subscribe to my free email update list. But if you've been following my stuff, I've been talking about gold now for quite some time, and we've seen a historic breakout in the price of gold. It started uh, really at the end of February, but it's continued higher. And last week it made a new all-time high. But when gold breaks out like this and begins a new bull market, historically it's a signal that you're really heading for a overall commodity bull market. Other commodities will go up, and there's lots of opportunities in that. And in my update, I talked about some of them, and I'll share them with you. So the reason this happens, though, is because gold is part of the commodity complex. And as part of it, it's really the leading element of that complex. When gold starts a new bull market, typically it's the start of an overall commodity trend. So here's the article. Title, here are trades to play new gold commodity bull market, plus another sector no one cares about going up. And I'll be talking about that too. It's a stable stock market sector that pays big dividends, and the earnings are totally stable. So it's safe and defensive. But I point out here that despite the moves in gold, despite people like me, and there's just a few of us doing YouTube videos like this, talking about it, we've been flooded, kind of the internet financial space is overloaded with Bitcoin gurus. So people like me have been drowned out by all of the Bitcoin gurus, and Bitcoin has been going up. And that's attracted the attention of the masses while they have completely been ignoring the moves in gold. And this shows that. This is Google Trends I have right here. And it's measuring the interest, the number of people typing in this case, the word gold price over the past couple of years. As you can see, the number of people typing it in has actually gone down in the past couple of weeks, while gold has gone up, and it's lower now than where it was a year ago, and lower now than it was 3 years ago. So quite remarkable, but really that's sort of what tends to happen at the start of a new bull market. Anything. Think about the stock market in early 2023, the first quarter of last year. We had a horrible bear market in 2022, but it bottomed out at the end of that year and turned up. The internals of the market vastly improved, gave us buy signals in January 2023. I wrote about that, did videos about that, but very few people were on board with that idea because of all the damage they had suffered through the previous year. And now everyone's bullish, that we've gone to new highs in the stock market, and Bitcoin went to new highs too. Now everyone is bullish. Now the gurus are telling you Bitcoin's going to go to 100,000 or to 1,000,000 or whatever the price is. They keep increasing those predictions. And this is one crypto guru video, and another one saying, these people are saying, buy it now and you'll become a millionaire next year. The hype over this is simply accelerating. But the masses like to buy when something has already been rallying, and then they get interested, and then it's the price though that drives their desire to buy, and it's the gurus who tell them reasons to believe it's a good time to do so. And by doing that, the YouTube algorithm benefits them, and there displaces people like me who have a different way of investing that isn't congruent with what most people want. And these people are telling them, get rich quick. You'll get rich in a year. I'm not saying that. I'm saying that we are starting to move in gold out of a sideways consolidation that's gone on for several years. When gold went through 2100, it completed that consolidation phase, and now we're at 2238. The best time to buy something is when it's getting out of a stage one basing phase or very early in stage two. And I would say we're early in stage two now, but not all commodities have broken out. Remember, gold is historically the leading commodity that breaks out first. This is the CRB Commodity Research Bureau Index. It measures a basket of all commodities: gold, silver, other metals, energy, soft commodities, food, agriculture, corn, wheat, soybeans, coffee, all the major commodities that people use in the real world. And that index has not broken out yet. And neither has the price of silver, still below $26. And I believe that an easy way to anybody can profit from the things I've been talking about in my videos the past 6 weeks is to buy physical silver. This right here is real. This right here is 10 ounces of physical silver, currently worth around $250. What would you rather do? Spend $70,000 for a Bitcoin or $250 for 10 ounces of physical silver that you know is real, that you know is going to get hacked by an exchange, and that has real fundamental economic value in the real world. But it hasn't broken out. That's why it's really exciting. It's still below $26. Now, another way you can profit from the trend in commodities is other ETFs. This here is BCIM. It's an ETF that I bought in my accounts. It holds futures contracts for copper, aluminum, lead, nickel, and zinc. And it only has a market cap of $22 million. Doesn't do much trading volume as a result, but that tells you that the masses have put no money into this, and they have no money in commodities. And here we are with a stage one base right there on the screen. You can buy it, put a stop loss under 21 or 20, and if it closes above 22, a weekly close above 22, will trigger, I believe, a signal that we are starting a new bull market right here. And that's exciting. New bull markets don't just last for weeks or months. If I bought Bitcoin, look, I don't think Bitcoin is going to fall or top right here, but I don't know when it will. I have no confidence in saying that Bitcoin's going to go up for more than 12 months. But I do have confidence in telling you that gold, silver, commodities, and ETFs like BCIM that invest in the commodity index or complex, in this case in metals, that they can go up for years, not just a couple of weeks. It's not a day trade, it's an investment. And you can get a long-term capital gain in investment. You don't have to think, oh, is my Bitcoin going to go down $10,000 next weekend? And it could do that, and one day it will. One day it will. The 200-day Bollinger Bands, or BCIM, are contracting. And here, the GDX Gold Stock Index, which I do also own, is another way to get involved in this sector. This owns most of the big cap mining stocks, and it typically goes up more when gold is in a bull market, and it too is perked up, but really it needs to close above $32 to break out, just like silver needs to close above $26. Now, let's talk about another sector in this video that no one is interested in. You really, when's the last time you've heard anyone on CNBC talk about buying gold mining stocks? But when is the last time you've ever heard anyone in the financial world tell you to buy utility stocks? Here is the XLU Exchange Traded Fund. It perked up last week. Historically, the utility sector outperforms the stock market when you're at after the last interest rate hike in the cycle, and then goes up even more as interest rates go down, which when you have a recession and the stock market's declining, interest rates typically go down when that's happening, and utilities do well because they have stable earnings and they return a lot of those earnings to their shareholders as dividends. And those dividends, when you buy at the end of a rate hiking cycle, they don't go down; they're locked in. Basically, one utility stock I own is a D symbol. That's Dominion Energy. It's paying a dividend of 5%. Another utility stock I own is UGI Corp. UGI is the symbol. Dividend payment of 6.11%. I know people have no interest. These aren't fad sectors. Gold is stable. Silver's been around as money. This was the first money ever used or mentioned about in the Bible, and that's real. This isn't AI. This isn't crypto. These aren't the fads of the moment, just as metaverse was the fad of the past couple of years and then went away. No one is interested in investing in metaverse. This is about stability, safety in a portfolio, and getting long-term capital returns too. Look, I'm not going to make a price prediction. I'm not going to tell you gold's going to 10,000 because I don't know that. No one can predict where the prices of anything are going to exactly be at in the future. I'm not going to talk like a crypto guru that tell you crypto is going to 1 million and these sort of things. Money isn't made by listening to predictions and believing in predictions and so forth. It's made by analyzing trends in the market, managing your risk, and then making adjustments when trends change or you see new opportunities in the market. These are the fundamentals of what it takes to be a long-term winner in the markets, a consistent winner in the markets, not just someone who makes money in a couple months and then loses when things turn against you because you don't recognize when things change. There is nothing new happening in these markets that has not happened before. Really, that's the way things are. The event of the last week was the horrible collapse of that bridge outside Baltimore. It's going to take years to rebuild it, but that was a shocking event. But it's not the first time there's been a major bridge collapse. There was a major bridge collapse in 1980, and you can see how they dealt with that and give you an idea of how this situation is going to be dealt with too. Nothing new is happening. Don't let people in the markets who tell you you're in a new market, things like this have never happened before, this crypto is revolutionary, and it's nothing like it has ever been there. That's not true. Not true at all. Look at financial history. The first speck in a bubble that really had an in-depth history written about it was the tulip bubble in the 1600s that broke out all across Europe. And when it happened, the price of tulips went up faster than what the price of Bitcoin has done in a short amount of time. Tulips went up in a couple of years quicker than what you've seen the price a Bitcoin go up. So the Bitcoin gurus who tell you that nothing has gone up faster than Bitcoin don't know what they're talking about. They are trying to hype you up, and they're not going to stop increasing their hype as long as the price goes up until the price tops out. That's what they did the last two times Bitcoin went up and then topped, and then many of them will simply disappear. I'm not going to do that. I'm not going to disappear. I've been talking about these markets now since the year 1999 and 2000, and that's the way it is. And if you want more content, if you like this sort of message, hit like. If you want to get my free updates, subscribe below to the email list, and to get YouTube to send you an alert when my next video is up so you'll know and be able to watch it, hit the subscribe button, hit the alert bell next to that, and I'll be talking with you later.